Hello and a warm welcome to my channel. Ask me a stock and I will cover it for you from a long, medium to short-term perspective using the Japanese study of Ichimoku multi-time frame analysis and Fibonacci-derived harmonic trading patterns. So if you would like me to cover a stock for you, write it in the comment section. But please do note that it should be from the large, mid or small cap segment. No small cap, micro cap stocks at all. Now, a disclaimer, this is not a trading or investing advice to you. This is an educational talk purely based on the studies of Ichimoku and harmonic trading patterns. Please do your study properly before taking a final decision on whether you want to trade or invest in the stock. Also, please note, not a single rupee has been charged for this. This is completely free. Now, today's stock is Infosys, the tech giant from India. Infosys, they recently came out with its results, with market reaction was positive to that. And those who haven't checked out my recent video on TCS, the link is there in the description box. You can check it. I had covered Infosys earlier also 2 years back. Even that video is there in the description box. So let's now go and check out the charts of Infosys and try to understand what lies ahead. Now I'm starting with the quarterly charts of Infosys since 1996 data, and you can see the stock has had a dream run, superb run. Then the dot-com bubble, then again a revival, then the subprime, then some little bit of sideways scenario, and then steady movements all along the path. Now, interestingly, as per the Ichimoku theory concept, the baseline was just tested last in 2008-9 during the subprime. Prior to that, yes, the dot-com. And every time after that, it's given a beautiful return on just touch, not broken that once since that long, lengthy period, since 2008. That's a beautiful 17-year run in it. Each time the pullback has been an investor's delight to add those who missed out on opportunities. And was it same here again this time? Let's find out going ahead what it is telling us in the lower time frames. Now, in the quarterly time frame, it's just about closed around the resistance of quarterly resistance is 1560, closed at 1590 on Friday. The support is at 1225, quite down, quite down. See, you can see prior to that, the baseline was flat. The stock did not move. Again, a slightly flattish baseline, which will remain flat for a couple of more quarters out here right now. So that's the scene from the quarterly charts. Now let's have a look at the monthly chart and try to decode what it is telling us. Now in the monthly chart, in Ichimoku, we have the N wave theory and an internal N wave. So in my reading, this move from 2021 down to 22, then again the rise to 24, and again the current down is a sideways N. So the previous rise is something like this. And this particular move that we are seeing in Infosys is the I waves counter trending I wave taking place in this zone right now, this being the previous rally out here for the stock. So a sideways correction, not a depth, not an in the heavily price wise downward move, but that more of price wise. And here also you can see from a long time back, this is the subprime low just below the cloud. This is 2012 testing the cloud, 2017-18 again not even testing the bottom side of the cloud. Neither did the pandemic do, nor during this Ukraine war and then the tariff war, nothing. Staying above the cloud, good healthy sign for the stock right now. Now, as per the monthly, the support is coming in at 1400 out here. There is, just about managed to close above the 1560 resistance, with the next one slightly above at 1650 to 1740. You can see that's a big resistance. You can see out here how this resistance, the previous high, it has managed many candles above it, but that might again impact it right now if if it runs too fast towards that zone. Let's have a look at the weekly charts and try to assess the weekly. What does the weekly tell us? Now, in the weekly, I have a bullish harmonic reciprocal ABCD formed in April, out here in the month of April, 7th April, the tariff low, as we could call it, and beautiful bounce back from there in 6 weeks' time, which has taken it to the almost to the 50% retracement of this bullish harmonic. uh, Around, that's the resistance around 1650 60, which is also based on Ichimoku. Next one, like I said, 1740 in the monthly also is a crucial one, and then we have one at 1815 to 1925 on the upside. While the weekly future Kumo is still bearish, so don't expect the stock to straight away run away on the upside. This the any pullbacks out here could see a lot of support around 1475 and then down quite below. So 1475 to 1425 is the interesting weekly support for the stock. Let's have a look at the daily time frame now. Now, before I go into the daily and lower time frames, I would like to inform you that my courses on harmonic trading patterns, Ichimoku, and trading psychology are available. These are made into videos along with PDF, level wise, chapter wise, breaking into small videos with loads of examples for both bullish and bearish scenarios. Both Ichimoku and harmonic trading patterns are available in Hindi and English, so you can decide whichever one you want. Trading psychology and risk management is an extremely important subject which most traders avoid or are not aware of. And this is one of the prime reasons why 90% traders fail in the market as per the SEBI report, because trading discipline and risk management is of more importance. Analysis is given higher in importance, and analysis is actually bulk of it is outsourced. So it is the discipline which is more important. The trading psychology and risk management videos are extremely detailed, and it includes bonus material about various technical studies explained briefly, which complement harmonic trading patterns and Ichimoku, how to do a relative sector choice selection, which means that at which stage, which sector looks bullish, which sector looks bearish, and among the sectors, which stocks stand out, so that you are not trapped in the weaker on the wrong side ones. Also, with that is a study of option strategies where, based on the current market scenario as and when, and your own risk appetite, which strategies will suit you in the market. And finally, a self assessment kit, which I will teach you on how to do a SWOT analysis of yourself regularly to identify what is your strength, where you should continue to work on, what is your weakness, where you need to start improvising on, what are your opportunities where you can do much better, and finally threats meaning there are certain kinds of time frames, segments, scenarios in market where you may not be able to do well. So during such phases you need to stay away from the market or that kind of a stock or scenario. The details of the stock of the courses are there in the description box. You can check out the link. And if you have any doubts, you can shoot out an email to me and I will get back to you on that matter. Also, for those who are completely new to charts, who have not done anything on technical analysis, there is a bonus material on introduction to charts and on candlestick theory. There's a detailed video again broken up into small chapters of around 3 hours. So if you have any doubts, shoot out the email. And now let's go back to the stock analysis. So now in the Infosys in the daily time frame has entered into the cloud area. This is the cloud area, and I've always said that the cloud means uncertainty and can lead to volatility in the stock also. So one should be prepared till it doesn't move out of the cloud. There will be volatility happening in it. So be careful with your quantity of exposure inside the cloud. Now, in the stock has got support quite down out here at 1560 and then deep down near 1475. There's nothing in the middle at all in the weekly. Resistance immediately coming up at 1620, 25 to 1640. And like I said, this 50% retracement is not going to be that easy to break on the upside out here. You can see a lot of time was spent before it broke this zone. So this is the zone one should be careful of right now. So right now, if I were to, look at it, the support is 1560 extreme short term. Below this, be prepared for downward journey in the stock possible. Let's have a look at the hourly now. Before I go to the hourly time frame, let's have a talk about the derivative data. The 1 day futures derivative data of Friday, where the stock had a 1.4% fall, saw an OI rise of 1%, not too much, 1% OI rise, which is suggesting, just if I look at the daily time frame, of some short build-up. But the 5 day data shows a 5.3% increase in OI. The price has gone up 5% with a 7% reduction in the OI, suggesting on theory that the stock saw short covering. It could be short covering also, and at the same time, my reading is that in this particular move, which saw consolidation and this spike out here, the stock could have been seeing this OI, which we are seeing down, could be long unwinding also taking place in that zone. If there is a decline from tomorrow, Monday, then consider this 5 day move 5% with a 7% reduction in OI as profit booking. The option data is suggesting 1600 call as a highest OI, which is again very close to the price, which is one of the reasons why I feel there was profit booking out here. And the highest put side OI is at 1500. There was, as per the data, what we see in the open interest of the stock, we can see that there was short cover, there was long unwinding taking place in the calls, and in cases of the puts, there was short covering, or you can call profit booking, taking place there also, of those who had written the put. So that data is a slightly bearish suggestion out there, or not bearish. I would say that it is something that market is not expecting too much of an up move in that case. The hourly data is charts are completely sideways. Could be a triangle. Too early to call it one, but it's suggesting 1560 again as a big support out here. That breaches, hitting down to 1500, while up move above 1620. So my conclusion for this stock is that if one were to do a fresh long in it, I would like to do it with, keeping a bigger picture in mind, between 1560 to 1500. And if there is a panic drop due to results coming up in July or something like that, quarterly, or anything to do with US, then I would look at down towards 1400. But ideally 1560 to 1500 looks like a good zone to accumulate on the downside, keeping in mind the upside of first 1750, then 1825, and then 1900, and then an Ichimoku price theory target of around 2200. While in the short term, extreme short term, which is for a derivative point of view, I would be looking at 1560 as a stop loss for long run, or a stop and reverse to go short towards 1500, 1475. But that I don't think is going to be a trade which is, in my reading, with would I would be doing with less risk, less quantity exposure on the downside, or would skip that kind of a trade. And on the upside, supposing we continue to see it push up, then above 1625, again, I would be very cautious with fresh quantity additions towards 1650, 1740, because in my reading this zone will not be that easy to break in the short term. It would be volatile. It would see stock moving in a range, pullback, etc. happening. The main breakout starts above 1759 and then 1925 to this. So short term, be careful with moves. Try to buy at support, sell at resistance if you can catch it properly. And in the medium to long term, stock looks fantastic towards 2200. Good risk reward setup out here. So I hope this video is of help to you. So please do like it, share it, and do follow me for regular stock and index ideas. Until then, all the best with your trading and happy investing.